Hello, traders. In this edition of your weekend video newsletter for Sunday, June the 4th, we'll discuss the indices, all of which moved higher. With the debt ceiling now behind us, we'll be watching for action on Monday and planning accordingly.
There you go.
Once again, I want to present S&P 500 versus commodities. Commodities taking a back seat to big cap stocks, the 500 on the S&P. When this turns higher, we're looking for higher prices. So we've been talking about this for the last 2 to 3 weeks. And if you had heeded that observation, you were taking longs and looking for follow-throughs. So looks like we're going to continue higher in the face of market pundits, which continue to talk about recession, inflation, the Fed, the debt ceiling, and all the reasons why you shouldn't be buying. I think Rick Santelli put it the best. If you wait for the Fed to pivot, you've missed an opportunity. The opportunity started in October. We never came back to test the 2022 low. Instead, January started off with markets moving higher, and if you were trading the FANG stocks, you did really, really well. S&P growth versus value. You can see in the lower two panels, value stocks finally breaking out of this range. If that continues, the rotation that we pointed out to start the week did in fact work out for the bulls, and we continue to see growth obviously outperforming, but value is now starting to kick in as well. So that's going to impact breadth. The S&P equal weighted index breaking out of a descending channel. All of these signals turned up. The number of stocks above their 50-day in the upper panel, number of stocks above their 200-day in the lower panel, and CCI all triggered, giving us a follow-through buy signal. We are a bit extended, so we'll start the week with a bit of caution, but we're looking for a lot of those FANG stocks to continue trending. Overall, the indices and breadth have improved enough that we could see momentum carry us forward. However, we are going to be a little cautious to start the week as usual. Once we have a clear signal, we can trade accordingly. Starting off the week, we had the New York FANG index closing just off of recent highs, rallied all week, was showing muscle on RSI. And MACD is above its signal line, rising with stochastics embedded. Apple is trending, therefore we'll be looking for buy signals or a pullback to the 9 EMA for better entries. Adobe consolidating, breaking higher on Friday. Amazon trending. Broadcom and the semis after breaking higher post NVIDIA earnings. They're starting to show signs that they might continue, so we'll be watching for NVIDIA to do that as well as Micron, Marvell, and your favorite semiconductor stocks. Berkshire Hathaway, a little range bound, looking for a breakout. RSI is rising above 50. Cisco, all about networks, looks like it's trending as well. Still in a range bound condition, RSI above 50. And volume shows that institutions have been accumulating shares. Meta, a big winner all of last week and the previous week. It continues to trend along the 9 EMA. Pullbacks to the 9 EMA keep getting bought. If you're day trading it, we'll be looking for buy signals. If you're swing trading it, I'd be looking for a little dip first, back to the 9 EMA. RSI is showing muscle. Volume shows institutions have been active. MACD's above its signal line. Stochastics embedded. We have the microsectors FANG ETN, which mirrors the FANG index. If you don't want to spend $7,500 per share on the New York FANG index, you can always trade this one. Doing the same thing, trending, looking for a follow-through just off the highs on Friday. Volume shows institutions and portfolio managers seem to be buying shares. I wouldn't mind a few shares on any kind of pullback to the 9 EMA in a consolidation after this breakout above 27. It is really hot going into the week. Most stocks, especially in the tech sector, are a bit extended. Look for a little pullback post debt ceiling signature by the president this weekend. Google Looking for this breakout or a pullback to the 21-day. Either way, I'm looking for buyers to step up, whether it's on a breakout or a pullback for better entry. I do have some options on Google and plan to add shares at some point, depending on a pullback or a breakout. Microsoft trending, breaking above its recent highs, with many analysts believing that software is going to be stronger than hardware over the long term. We're talking 10, 20 years in respect to AI. While NVIDIA has the lead for now, we're looking for a follow through with Microsoft and other software companies like Adobe, AutoCAD, Salesforce, and others to continue to improve, especially in light of AI and its effect on their businesses. Netflix looking pretty good. RSI showing muscle. NVIDIA, of course, we've been waiting for this consolidation. Does it break down, pull back? Does it hold the gap, or does it break out? We're waiting for the 7th, 8th day strategy. A lot of volume post earnings. MACD is above its signal line. Stochastics overbought, so we're still waiting for this to give us a signal, whether it's a pullback for an entry or a breakout early this week. Finally, there is Tesla, which is above the 200-day all of last week, Tuesday, Wednesday, Thursday, Friday. Volume obvious. Institutions are active. MACD is above its signal line. Stochastics embedded. We'll be looking for buy signals and day trades intraday. This is consolidated basically above the 200-day. Hasn't really rocked higher. Once it gets above 217.80, 218, this one should run. You can see these volume by price bands over here on the left, indicating where previous memory, if you will, of price action, where the stock is traded the most, is dissipating as we move above this level. So once it gets above 217, 218, this should be a good swing. You could try a position and start with, smaller shares. If you're going to do 1,000 shares, maybe I'd do 50 to 100. Or if you're going to buy 10 options, maybe you do 2 or 3 out later in the year, October, November, December, something like that, or maybe some leaps in January. But the volume shows that institutions are active. I like it. Looking for Tesla to continue higher. One of my favorites going forward, along with NVIDIA. All 11 spider sectors were higher last week and on Friday. Semiconductors were flat, but the larger tech sector performed very well. Up on the week, 1.29%, despite the consolidation with semis. In addition to what we saw with small caps, all outperforming on the week. That said, for all of you who bagged some really nice gains over the last few days, the upside is shrinking unless the call wall managed to push above 4,300, which would be really something. We'll protect those gains in light of an idea that maybe we see some sell the news. And if that doesn't happen, remember credit spreads routinely get tested, especially at these higher deltas. So if the call walls move up, then we'll have to change our plans. Bottom line, we'll be starting off the week with a bit of caution to see how we trade and then act accordingly. The IBD 50 stocks that we've listed below, especially the ones with asterisks, are set up and looking for a follow through. DraftKings has a double asterisk. All of the criteria that we look for: oversold stochastic, RSI rising above 50, price action above the 921.50 day, coming out of a base, is firing. So we're looking for a follow through there. In addition to all the FANG stocks up above and the stocks that we listed like Caterpillar, which Stephen was trading last week. MongoDB had a 28% move. It gapped up, looking for a fade for a better entry. Mindful of the idea that we could see a sell the news event this week after the debt ceiling is behind us. The president signs the deal and we move forward into the month of June. Looking for the semiconductors to follow through this week after a consolidation post NVIDIA earnings. 7-8 days. We're looking for NVIDIA to break out this week as well. Watch ACLS. In this case, we do have overbought conditions in stochastics, so this could pull back a little bit, or stay embedded. We do have a decent list of stocks from varying industry groups that are on the IBD 50 this week, from Centos, which is a economic indicator of sorts. If Centos continues to move higher, this company has 1 million customers worldwide. They sell and rent corporate identity and uniforms to a wide range of industries, which is indicating that employment is getting better, as we saw with that hot jobs number last week. Looking for a breakout, continuing here, the weekly time frame. We always want to check the weekly. We're trending above a rising bullish 10 EMA. MACD's crossing. We have rotation in KST. The rate of change is increasing as this turns up. This is telling you we're starting to accelerate. Watch CTAS, Centos, which could follow through. In addition to CRM, Salesforce, which is trending, it pulled back on earnings. Looking for a follow-through. Volume looks pretty good. MACD's above its signal line. Stochastics looks like it's going to recycle. So maybe we get down to the 50-day and bounce. That might be an interesting entry as the economy is showing signs of improvement, which can be confirmed by looking at industrial production and looking for a higher high in the month of June instead of a lower low like we saw back in 2014, 2015. Also in 2018, 2019, we're making higher highs. So that's telling you to keep an eye on these stocks that are related to the economy. Previously mentioned DraftKings, double asterisk on that one. We have RSI rising, price above the 921 day, trending, volume picking up on Thursday and Friday. It's trading post earnings, watching for MACD and stochastics to turn. I like this setup where momentum is about to shift into the bulls' favor and we're threatening a breakout. Look at the weekly time frame. The 10 EMA has been turning since the beginning of the year, and we could see this continue higher. So looking for a retest of that $60 level at some point, maybe. We'll see. Rate of change looks good, continuing higher, waiting for a breakout above 25 to 27. Once we get above those levels, we might see DraftKings follow through. Stocks from completely different industry groups like Royal Caribbean, Hyatt on the IBD 50 this week. Royal Caribbean breaking out of a range. I know Acceleration and a couple other people are in this already. Looking for a continuation. Volume shows institutions have been active. MACD's above its signal line. Stochastics a bit embedded, but it does look good. Looking for a continuation and a follow through. Watch the weekly. 10 EMA is rising. It's a little extended. Can come back. But generally speaking, for a swing, it looks like it's going to follow through. Hyatt Hotels on the list this week as well. We've got the hotels looking pretty good. Stochastics, again, set up very nicely. Momentum is carrying forward. MACD is just now crossing. Volume picking up. Price above the 921 50-day. It's a bit of a range, but most of these are following through. If you look at the Hilton, similar kind of look here. Okay, when they're all moving together, that's a good sign. Hilton, Stochastics, MACD, Volume, RSI. Look at Marriott. Doing the same thing. Volume, MACD, turning. So with the increase in breadth and other industry groups and sectors getting institutional interest, we're looking for these hotels and travel and leisure stocks to continue higher. As you would expect, that includes the casinos as well. Las Vegas Sands for the last 3 trading days have seen some action. Stochastics, again, oversold and turning. MACD's turning. Volume picking up. MACD will turn as a function of price. RSI moving above 50. Keep an eye on these. They'll probably see some action this week as well. Caesars trying to break out of this range. If you draw a horizontal here around 40, that's the lower end of this range. Look at the weekly time frame. Needs to get back above the 10 EMA weekly. At some point, this is going to get above 60, 62. That'll indicate that the 10 EMA is also moving higher and would be a good swing time frame into the summer and the fall months, perhaps. Not quite there yet. Additional industry groups like Manhattan Associates, Nice trending above the 90 MA. Last time I tested the 21 day was 2 weeks ago. Volume looks good. It's been trending, kind of looks like Meta's chart. Like we had Meta with a gap up in February, came back to the 21 day. Ever since, it's come back to the 90 MA, but has not come back to the 21 days since before earnings. Meta's another one I'd like to see a follow through. It's trending. So potential day trades with once we see buy signals, there is a potential for it to pull back. That would be a better setup for swing traders. With sectors rotating in, as we were alluding to last week, as we started the week on Tuesday, we had these long tails on these sectors as they pushed into the leading quadrant: industrials, financials, energy, and materials. In particular, keep an eye on stocks like Caterpillar, which did very well in the industrial group, with Stephen trading that one on Thursday or Friday, I believe. Looking for this continuation to continue. Broker dealers are looking a little better. IBKR also moving higher in the financials group. Financials were one of the sectors that rotated in last week. Keep an eye on JP Morgan, Goldman Sachs, Morgan Stanley, etc. The big money center banks. IBKR looks pretty good here, though. RSI is above 50, breaking back above the 50-day, a descending pattern. Looking for that breakout volume to pick up. MACD above its signal line. Stochastics a little embedded. Just wanted to point it out because it's new on the IBD 50. Look for a follow through if financials continue to see bidders. As you would expect, Charles Schwab also following suit, looking for this to continue as it stays above the 50-day. Big base down here, looking for that to continue and for Charles Schwab to get back into the 80s as people completely forgot about the banks. Well, most people anyway. Looking for this bid that we've seen in Charles Schwab to persist and for prices to get back into the upper 60s in the short term. Additional industry groups. MedSpace, a scientifically driven global full-service clinical contract research organization providing phase 1 through phase 4 clinical development services to the biotech, pharmaceutical, and medical device industries. Looking very strong. Has a nice bid. Doesn't trade a whole lot of volume. I like to see stocks that are trading above 200, 300,000 shares. That said, it's trending above its 9 and 21 days. So if this continues, RSI is above 50. Stochastics rising, MACD crossing. This might be a trade. If it can get above 225, this volume by price band, we could see a quick move to 240 in the short term. The big takeaway is that multiple industry groups and all 11 spider sectors were higher last week. So check your favorite stocks and make sure you check these stocks that are listed below, already gone through, and look for criteria that would suggest that we could see higher prices. Watch Uber too. I've been keeping an eye on that one. Uber, Zscaler, Celsius, and a few other stocks that have been talked about on various IBD products like Leaderboard and Swing Trader as they issue buy signals and the markets continue to see improving breadth. So that's the theme this week. Watch breadth. Let's see if there's any sell the news event because the debt ceiling is behind us. Or if we see buying, I would expect that the upside is pretty much contained at 4,300. If for some reason we got above 4,300, we'll reassess and update you during the week. So that's going to do it for me for this week. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is June the 4th. I'll send the watch list out later tonight around 11:30, 12 o'clock on the East Coast, around 9 o'clock on the West Coast. So be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you in the morning.